Hello traders, Gary Wagner here. Approximately noon in Honolulu. It is the 12th day of December, Friday, and this is the daily report for gold and silver, our weekend review. And again, I am reminded of an ancient Chinese proverb that simply states, "May you live in most interesting times." I think that is a very appropriate statement when we consider this week in review. This week we witnessed something absolutely unique. We are witnessing the philosophy that if something doesn't work, try it on a much larger scale and hope for a different result. Traders, that's the definition of absolute insanity. And traders, that's exactly what we witnessed in the marketplace this week. For the first time in history, on a global level, we had an international consortium comprised of the major economic powerhouses looking to add liquidity to the market in the belief that that will help stave off the current sovereign debt crisis in the European Union. And traders, you need to ask yourself one simple question. How well has that worked for the U.S. government and our budgetary policies? Has our deficit decreased? Absolutely not. Do we have any handle or any plan to resolve it? I don't see one. And that leads me to my predictions and forecasts for the gold market in this upcoming year of 2012. It is my belief at this point that we will witness an unprecedented rise in the price of precious metals in 2012. Traders, we've looked at this chart from time to time, and you know that this forecast is based upon cycles and a strategy which simply looks for history to repeat itself. I think that it's more appropriate than any other time because we are providing strategies that haven't worked in the past, and you can see how that has affected the price of gold. We've seen it roughly double every 3 to 4 years. I think that it is highly viable that we will witness a monumental and historical rise in the precious metals markets over next year. As long as we continue to print more money, gold has nowhere to go but up. We saw the marketplace after this major correction, and this correction took us from our record historical new high at 1920, and we saw it retrace to 1537 intraday. We saw the market really give back a huge percentage of the gain. My sentiment is we should have a rally through the end of the year. That rally should push this market up to a minimum, I think, of around $1,800 per ounce. At that point, on a technical basis, we're going to see it, in my opinion, move towards the existing record high, which is at 1923, and my sentiment is that we should break that easily by March of 2012. So that is my long-term forecast and my forecast for next year. What are we looking at in terms of strategies and where we think the market will go towards the end of this year? On a technical basis, you can see we have had a series of lower highs and a series of higher lows. That's that consolidation that we've been talking about and the pennant formation that in fact is forming in the market. We're looking at our weekly chart. I believe that once we break above this resistance line, we could see the beginnings of a major play in the precious metals market, specifically the gold market. And what about silver? I think that silver has the potential, but has a lot more risk and a lot more challenges to see the same result. I think it's going to follow in suit with gold as gold moves up. However, the industrial demands for silver give it that push-pull scenario. You can see that we have had the absolute inability on a closing basis for silver to really form a base above this resistance area of around $33 per ounce. We put out a soft buy signal with a strong caveat that we need to see that marketplace close and trade above $32 290. That is superlative resistance right now. You can see over the last 2 days, it gave back any of the gains that it made. Look at these highs that we have, but look at where we got our closes. And what is most significant, I believe, is that these closes are below that resistance area. I cannot, with any sort of strong sentiment, tell you I am as bullish on silver as I am on gold. Simply put, I am not. I believe the potential is there, but I think that there is much greater risk in silver with less potential to the upside in terms of fundamental rationale. In terms of percentage gains, silver is absolutely able to not only outperform gold, but exceed as it did last year. My personal feeling right now is that the stellar performer in 2012 will be gold. This has been Gary Wagner wishing you, as always, good trading. Have a great weekend. We'll talk to you on Monday for another daily update and review. Bye-bye.